Hello and welcome to this video. In this video, we will analyze MasterCard stock that has ticker symbol MA as a long-term value investment. So due to some key developments and new partnerships, MasterCard has been a lot in the news. Also, it received an excellent strong buy rating from analysts on TipRanks. So this fact, along with its recent partnership with Gemini to introduce crypto rewards credit card and strong Q2 results also, I decided to cover MasterCard stock for my viewers. So one recent big achievement was the partnership with Gemini for the introduction of crypto rewards credit card. This indeed is a very impactful step, since blockchain technology and DeFi space in particular has been at the forefront of innovations in the finance sector recently. According to Gemini CEO Taylor Winklevoss, the Gemini credit card will offer consumers an easy way of earning crypto rewards. Winklevoss stated, MasterCard continues to evolve and meet both industry and consumer demands and commit to the crypto space. We are excited to partner with them on our first real-time crypto rewards card, further helping to bring crypto mainstream. Furthermore, it is not just about the news but the actual results also. So as far as the second quarter results are concerned, MasterCard delivered solid results and as a consequence, it topped revenue and earning estimates. Net revenue increased 36% year on year to $4.5 billion, beating consensus estimates of $4.33 billion. The increase came on the back of 58% growth in cross-border volume and 41% growth in switched transactions. And adjusted diluted earnings per share were up 43% from the same quarter last year to $1.95, beating consensus estimates of $1.72 a share. Amid the revenues and earnings beat, Michael Maybach remains optimistic of a recovery in international travel, driving additional growth. Now let me provide a brief overview of MasterCard, and later on we will analyze its stock via 14 value-centric dimensions to evaluate its visibility as a long-term value investment. So according to TipRanks, MasterCard Inc. operates as a technology company. The firm engages in the payments industry that connects consumers, financial institutions, merchants, governments, and businesses. It offers payment solutions for the development and implementation of credit, debit, prepaid, commercial, and payment programs. The company was founded in 1966 and is headquartered in Purchase, New York. Now let's analyze the MasterCard stock through our 14 value-centric dimensions to evaluate its visibility as a long-term value investment. I will also be interested to see how much score we get out of 100 for the MasterCard stock. So as always, I will also be interested to see if we can get a score of 75% over the time frames of 3, 5, or 10 years and see the parallel or correlation between our feasibility analysis and the opinions of analysts. In other words, I will be interested in seeing how well our dimensions converge to the same conclusion as the analysts who have given it a strong buy rating on TipRanks. TipRank is a good tool and I use it all the time to look at the most trending stocks and what analysts are saying, but I also have my own criteria which I use to shortlist stocks, and the whole point is to give you that unbiased opinion. Later, if our dimensional analysis validates its visibility as a good investment, we will look at the current state of the market through the lens of 6 critical dimensions to gauge if it is the right time to accumulate MasterCard stock, or shall we wait for the market to offer it to us for a cheaper price. So let's go ahead and first analyze the MasterCard stock via the 14 dimensions of value-centric investment feasibility. For those of you who are new to this channel, I'm Dr. Subayal. I am a business strategist, experienced investor, award-winning scientist, and also help the business owners as a coach and sales mentor. So first of all, let's have a look at the key numbers and ratios at the higher level. So the current price of the MasterCard stock is $348. The current market cap is $346 billion. The PE ratio over the trailing 12 months is 48.2. The PEG ratio over the trailing 12 months is 3. The earnings per shares over the trailing 12 months is 6.37. The current price to book ratio is 53. The current price to sales ratio is 20.8, and current price to free cash flow ratio is 51.6. The average revenue is 10%. The average asset growth is 13%. The average equity growth is 2%. The average net income growth has been 14%, and average liability growth has been 20% over the last 10 years. And over the last 5 years, the average revenue growth has been 10%, the average asset growth has been 16%, the average equity growth has been 2%, the average net income growth has been 14%, and the average liability growth has been 22%. And over the last 3 years, the average revenue growth has been 8%, the average asset growth has been 16%, the average equity growth has been 6%, the average net income growth has been 22%, and the average liability growth has been 20%. So we can see that the total revenue as well as the net income has been increasing over the past 10 years, over the past 3 years, except a minor drop in 2014 and 2020, which is fine since the drops were not drastic, and also sometimes the companies change their strategic direction and make some changes to their products and services as well as technology platforms to remain relevant, and that can reflect in their total revenue and net income. And the graph of total assets over total liabilities shows that the assets have been more than the total liabilities, and same is the case of total current assets over total current liabilities graph. They both have been always one over the past 10 years, over the past 5 years, and over the past 3 years, as we can see in the graphs. And looking at the PE ratio, the price to book ratio, and price to sales ratio, I normally focus on PE ratio most of the time since it shows me the number of years it will take for the earnings of the share to add up and become equal to the current stock price. So it is a good way to see how much value we are getting by buying the stock at the current price. So for me, a PE ratio of 20 is the ceiling. I never pay more than 20 times the earnings per share over the trailing 12 months for the price of the stock. Yes, there are some exceptions to this rule. For example, new companies with very high growth potential, but you have to understand that over there, the risks are also quite high. So an investment is always about three things: certainty, risk, and reward. So you have to gauge all these three dimensions before investing in a stock or any other asset. So we can see that the MasterCard stock has never been on discount in the last 5 years and the last 3 years. And if we look at the last 3 years in particular, we can see that the average PE ratio was over 48, 21 and 51 respectively, which shows that maybe by chance for some months in 2019, it was okay to buy the MasterCard stock, but overall it was never on sale. And as far as the key growth rates are concerned, we can see that they have almost always remained positive over the past 5 years, and the total assets have been growing almost as far as total liabilities. Also, even though the growth is similar in total assets and total liabilities, there is nothing to worry about since we already saw that the total assets are always more than the total liabilities over the time frame of 3, 5 and 10 years. And ROE and ROIC have always remained over 30% over the past 10 years, which is outstanding since for such a long time it definitely needs proper positioning and refinement of value proposition by management to remain relevant and match the value proposition to the evolving needs and wants of the customers. These numbers reveal the strength of the company as a value creation machine which is very adaptive to the market conditions, and it also reveals the strong competence of its management. And this is where the things get a bit more interesting. So the gross margins have been over 75% over the last 10 years, 5 years and 3 years respectively, while the EBITDA margins and net margins have remained over 50% in the last 10, 5 and 3 years respectively. This shows that the company's services are perceived as valuable and is competitive in its industry also. And as far as the diluted shares outstanding are concerned, they have continuously decreased from 2010 till 2020, and the rate of share reduction is faster in the last 5 years and accelerated even more in the last 3 years. And now let's have a look at the overall score of the 14 value-centric dimensions over the last 10 years, 5 years and 3 years respectively. These scores show the feasibility of the company as a long-term value investment over different time frames. Feel free to pause the video if you want to look at each of these dimensions and the results of them. So over the past 10 years, we get an outstanding score of 79%. Over the past 5 years, we get a great score of 86%. And over the last 3 years, we get the same outstanding score as the past 10 years, which is 79%, which is outstanding in its industry, which is evolving very fast due to the influx of faster blockchains such as Solana and Koti, as well as new DLT technologies such as Radix, which will definitely play a vital role in the new innovations and shaping the products and services available to the users in this rapidly evolving industry as the trends and technologies evolve. So we conclude that the result of our dimensional analysis is in agreement with the opinions of analysts about the MasterCard stock. Therefore, since we look at the overall score of 75% and above, and the MasterCard stock has managed to achieve a mind-blowing score of 79%, 86%, and again 79% over the time frames of 10, 5, and 3 years respectively, we believe that MasterCard stock is a great value investment. And as we all know already by now, these scores reflect in its strength as a market leader in its domain. No, of course, the fundamentals are excellent, but before we purchase the MasterCard stock, we need to answer the question, is it the right time to buy MasterCard stock, or shall we wait despite its outstanding fundamentals? So as you know, if you are subscribed to this channel, before we press the trigger, we look at the state of the market and see the price, sentiment, and hedge fund activity to see if it is the right time to buy the stock or shall we wait. In other words, we look at the 6 dimensions of market state before making a final purchasing decision. So for that, let's go to tip ranks and let's investigate. So the PE ratio range over the past 3 years clearly shows that the stock has never been on sale, and for all these 3 years the stock had the average PE ratio of more than 20. Hence, if we buy the stock now, we will be paying too much for the value that we will be getting. And as far as the analyst ratings are concerned, MasterCard is a strong buy. And out of 15 analyst ratings, 14 are a buy and just 1 is a hold. Also, the average price target of the analysts for the coming 12 months is $441.27 US, which indicates 25.40 upside as per opinion of analysts. As we can see, the hedge funds are not accumulating currently, which shows that it is not the right time to accumulate the MasterCard stock as per smart money. Also, the extent to which the insiders are selling the stock is more or less the same as the extent to which they are buying the stock. So the buying and selling seem to be in equilibrium, which shows that there is no convincing evidence in this graph which suggests that we should be in an urgency to buy the MasterCard stock. And as far as the current price of the MasterCard stock is concerned, we can see that it is not that below all-time high, and the PE ratio is currently way above the threshold of 20. Therefore, even though we believe on dollar cost averaging, but to start accumulation, we won't recommend starting off now since the stock is overpriced due to very positive sentiment. And as far as the similar stocks are concerned, both Visa and MasterCard are leading the pack as far as the PE ratios are concerned. But we get an impression that all the stocks mentioned by tip ranks that are similar to Visa and MasterCard are currently overpriced. However, as we can see, they are still the best options in the industry as a value investment. If you want to see the detailed stock analysis of Visa stock, please follow the link above. And I think that the reason of high PE ratios, or let's say high prices of similar stocks together with MasterCard, is also due to the ongoing bull market of cryptocurrencies, where many coins like Solana have gone up tremendously in price, and also due to the overall bullish sentiment of the DeFi space, due to which Ethereum and Cardano are also making all-time highs. Therefore, the very low overall score of 33% for the current dimensions of market states suggests that it is not the right time to buy, and of course it has great value proposition, outstanding fundamentals, and so on, but I will accumulate when the market presents opportunities, when the stock is on sale, and then I will start accumulating via dollar cost averaging to slowly make it a part of my portfolio. Buying a stock at such inflated prices that are close to the all-time highs is something which an amateur investor will do, but not something which savvy investors do. There are other companies and options on the market that will provide a better value for the money that we will pay for their stocks currently. And it is our job to look for them and analyze them before investing. And this is exactly what we strive to do on this channel. Thank you very much for your time, ladies and gentlemen. I hope that you enjoyed the content in this video. I post such videos regularly each week. Please subscribe, press the notifications bell, and select the options all so that you can get the notifications of future videos in time. Thank you very much. Bye bye and take care. Bye.